Morning everyone, and welcome to IRD Invest. Thanks for joining our special tech event today. My name is Jane Lowe and I'm the Managing Director of IR Department, and it's a great pleasure to be hosting CEO of Tesserent, Julian Challingsworth, here with me this morning. Thanks for coming along, Julian.
Pleasure. Thank you for having me.
Our pleasure as well. So just by way of background, Tesserent is Australia's largest publicly listed cybersecurity firm and provides a range of full-service enterprise-grade cybersecurity networking solutions. The company has recently completed a number of strategic acquisitions to strengthen its offering and its national footprint. So today, Julian will be talking to us about these recent achievements and also run us through what we can expect coming into the future. We'll run this as a sort of part presentation, part Q&A. So Julian will speak for about 15 minutes. And after that, we'll run through the Q&A. If you'd like to ask a question, just use the Q&A function in the Zoom ribbon at the bottom of the screen and type your question in there. We'll get through as many questions as we can in the sort of roughly 10 minutes that we've got. So with that, Julian, I'd like to hand over to you. Perhaps you can start sharing your screen and we'll look forward to the Q&A. Thank you.
Fantastic. Thanks, Jen. So thank you for having me on today. What I'd like to do is give you a little bit of background to Tesserent, talk to you about the acquisitions we've done to date, how we're bringing those acquisitions together and where we see the organisation going over the next couple of years, and then talk a little bit about the future intent and how we think that will play out. For anyone who knew Tesserent, it's gone through a complete transformation. Over the last 2 years, we've taken an organisation that was a small subscale listed firm based in Box Hill in Victoria, really had about 19 staff who were delivering a managed security product from Box Hill to the SME space in Australia, serving a lot of local government and smaller organisations. So when we looked at that, a new chairman joined that organisation and said it had really disappointed the market. It had listed 4 years ago. It hadn't met expectations. It hadn't grown to plan. Its revenue was pretty stagnant, around $5.5 million. There was a great engineering team in Box Hill. It was very engineering centric and really not commercially focused into the market. It didn't have a good understanding of its where it could take the business. So new chairman came in. We worked to pull together a new strategy and really thought there's a great thematic in cybersecurity. It's really becoming a more and more visible part for organisations, and Tesserent was in a good place if it could reinvent itself to build something significant for the Australian marketplace. So a key part of our strategy was understanding where organisations spent their cyber budget, what type of organisations were spending, who was well served and who was underserved. And what we saw very clearly was that the top firms in Australia, perhaps the ASX 10 or 20, were very well served. They had great in-house capability. And when they needed external support, often they turned to the big four, Accenture, Thales, to be able to deliver cybersecurity on a global scale. What we clearly saw was that the mid-market, large organisations, perhaps right up to the ASX 100, were in a very different position. Often they were pulling cybersecurity together themselves. They were dealing with 8 to 10 different suppliers. They were buying products and services, and they were putting it all together and hoping it worked well. And in many cases, it really wasn't working well. And you were seeing a lot of organisations in a very public way on the front page of the newspaper having cybersecurity issues. I think that visibility and legislation that the government put in around making breaches mandatory to report. So any organisation with greater than 3 million in revenue, if they have a cyber incident, they must report it to the government. And the government assesses that incident and potentially forces the organisation to write to their customer base. So what we saw was cyber security transitioning away from a technology problem, something that might be the domain of the CTO or a network engineer, right to a business risk. On the agenda for boards, very on the agenda for risk managers, CFOs, and often if you did have an incident, very public and very value destroying for incidents. So given that background, we thought that we could build a cybersecurity firm that provided end-to-end services, brought together some of the best capability from across Australia, but in a very focused way, in a way that addressed the needs for a single firm to deliver end-to-end cyber strategy. And by end-to-end, what I mean is the ability to work with organisations to understand the issues, understand the risks they're facing, understand their current capabilities, and build them a roadmap to uplift those capabilities, add the right product mix to defend their organisation, and importantly, monitor that 24/7 from an operations in Australia. So all of our business and our team at the moment is in Australia, looking after Australian organisations. So to start the journey and to build the capabilities we needed, we've acquired a number of firms, and you can see from the slide there, to date we've been on an acquisition path to bring in a number of high quality organisations to increase the capability that we have in-house to deliver the services we need. So Rivium, Pure Security, North, Zia, Heirloom, Ludus. We've recently announced IQ3, which will complete next week. And we're continuing to look for the right organisations to come in and extend our capability, so we have the team that can deliver for those large Australian organisations and government departments. Over that period, we've really transformed the business. So 2 years ago, we were 19 people in Box Hill. We were pretty stagnant revenues of $5.5 million, and we were losing $3 million a year at that time. Where are we today? Well, I think we're the largest listed cybersecurity company. Our market cap's increased from sort of 12 to 15 million to 200 million. Our revenue turnover run rate just exceeds over $100 million. We had our first positive EBITDA quarter. Q4 of the last financial year was the first time we had some green ink, which is great, and we are continuing that path this year. Over 800 customers that we've worked with in the last 3 years in various guises, delivering parts of the cybersecurity value chain. Over 220 skilled cyber professionals with 4 offices, so a good geographic coverage in Australia. We've got team Brisbane, Sydney, Canberra, and Melbourne, and we're the largest independent cybersecurity provider into Canberra, and that's a really key focus for us going forward, because federal government, law enforcement and defence are really making significant investments into improving their capability. And recently the federal government announced a $1.7 billion uplift in the spend that they're making to improve cybersecurity at a government level. And we're continuing to find great organisations to join the strategy. And currently we have 2 at term sheet stage and a couple more in evaluation. But we're looking for very special organisations to join the organisations with unique capabilities, so that we can take those capabilities in an integrated manner out to our customer base and actually improve the cyber defences that they have. So a really significant change over the last 2 years. So if anybody hadn't looked at Tesserent recently and they only knew it from sort of 2-3 years ago, or when it originally listed, a very different organisation. A lot of change. We've done a lot of things, but I think where we've got to now is really the start line. We've just got to the position where we think we can, from here, really go on the journey of scaling up and becoming an iconic Australian organisation that is trusted to protect Australia's digital assets. Our go-to-market strategy, and there's 2 parts to this slide, and is really quite straightforward. On the left is how we go to market for our financials and industrial clients. And it's very simple. We work with an organisation. We undertake a security review. We understand their baseline of technology, process and people. We understand where they are today, what investments they've made. And we help them contextualise the risk that they're facing and build a multi-year strategy to ensure that they're making the right investments and decisions to be protected. They've got the right pieces in place. Those pieces are working well together. And then we go through the tech ladder, which helps organisations with awareness, because it's staff and people within the organisations that are one of the biggest risks. So we help with awareness and training, policies and procedures, helping organisations learn how will they respond when they have an incident. How do you contain an incident? How do you deal with people across your organisation and your external stakeholders when you do have an incident? And then we have a whole engineering team that builds out solutions around the perimeter, their network, how their apps are secured, how do they manage the migration to the cloud, how do you secure your work from home workforce? Over the last 3 to 4 months, we've all seen massive changes in organisations working from home, and it's a very different security landscape when you've invested heavily in protecting workers when they're in the office, and now they're all working from home. So we've had a very significant uplift in work in that area. And lastly, we have the step 3 monitor, which is making sure everything works. We have that team of engineers in Box Hill, in our security operations centre, 24/7, making sure that all of the things work, that you are protected, and that if we see an incident, we're there to help organisations defend it and defeat it before it becomes a major business risk. Now, I know that the grid on the right is probably difficult to see, but this is the Defence Industry Capability Report that was recently released, and it's how Defence and federal government look at the market. And what they did was produce a report that highlighted all of the Australian organisations that were able to support federal government and defence in cybersecurity, and they used their matrix of what were the key services and the key things that they needed to ensure that uplift. And fortunately, Tesserent and our sister company were rated 3 times. So we have North, Pure Security and Seer Security, who all made the list. And importantly, Pure Security and North, some of the key organisations there in multiple categories, and probably the only organisation on the list that was rated as able to deliver across the full spectrum of services. So that's really something we were very proud of. It actually showed our government clients, the 15 department and agencies that we work with, that we have built the full capabilities that are required to support the market. So having a look at that, and when we break it down into where are our revenue streams, who do we work with, and then I'll talk to how we see each of the segments evolving and where our growth is coming from. So within our federal government, state government, local government, we see over 50, just a bit over of group revenue. We work with 15 government departments and agencies. We have a good team in defence, intelligence and law enforcement. This is a really important and high growth area for us. Today we're seeing significant uplift in spend and a requirement to improve the capabilities in this organisation. So being very strong in federal government while they're spending additional money is a key part of our strategy. We then have 30% of the group revenue coming from a really diverse customer base, probably 600 or 700 customers in this space, and it represents 30% of our group revenue. And again, definitely not growing as fast as the government sector, probably maintaining their budgets even through the pandemic, but really starting to shift where they're spending money. as I mentioned before, a lot of emphasis on helping their workforce be secure when they're not in the office. And we're seeing real changes in migration to the cloud. So a recent acquisition of Heirloom brought very strong cloud migration skills into the organisation, and the acquisition that should complete this week, IQ3, brings private cloud capabilities in. So that organisation hosts for 25 departments in New South Wales government, and we're actually the host of their information, and we wrap all of our new security services around that to make sure not only is the data protected, it's all stored in Australia, and it's supporting the goals of New South Wales government. The last segment there, critical infrastructure, made up of utilities companies, telecoms companies, and an expanding group with some recent government announcements will include a lot more of the supply chain, a lot more health organisations, and food safety and supply. So that's around 20% of our group revenue, but we think that will become a really significant and important sector, growing quite strongly over the next couple of years. So how have we brought all of this together? We've been very focused on the teams that are coming into the organisation. It wasn't a roll-up. We haven't been buying organisations to add revenue or earnings or just scale. We've been very focused on building specific capabilities and then taking those capabilities to market under three key go-to-market industries. We have consulting services. Consulting services are important to get in front of clients, to win work and help them understand the security landscape. And we deliver a range of services from architecture and awareness services, staff training, but also assurance services. We are probably one of the largest, if not the largest, pen testing or ethical hacking company in Australia. So those teams work with organisations to look for ways to hack into the business. And then we help organisations, when we do find how to get in, we help them fix those vulnerabilities before an unethical hacker comes in. We then have our products and solutions. Now, these are a mix. Today, they're predominantly third-party products that we bring in from some of the leading global product suppliers, the likes of Palo Alto, Splunk, Rapid7, key names in the product space for security. And we're also looking to extend that. I mean, you'll see there's a couple there in data management and IoT. So IoT is a really big focus for us over the next 3 to 5 years. This is a space that we see growing exponentially. I read this morning in the AFR that there's over 11 million IoT devices forecast to be deployed by Australian organisations. What that's doing is massively increasing the threat environment or the attack surface, where these relatively basic devices provide a way into the organisation for hackers and for people who want to exploit the vulnerabilities that exist there. So that IoT, coupled with changes in 5G, is a really key focus for us in building some capabilities, both organically across the consulting and product range, but also through some planned acquisitions that are coming that will give us significant capability and will bring in our own products into that space. And for us, it's important to have our own products as we grow because it will increase the gross margin, it will make clients stickier, and it'll extend our capabilities into areas that only Tesserent is able to go into. The last section there, monitor and manage. This is our key monitoring. Our security operations centre and our network operations centre is there, and our secure cloud infrastructure from IQ3. This an important part and underpins ongoing revenue because the monitor and manage contracts are all 3 to 5 year contracts that keep us very sticky within clients. We monitor, as I said, 24/7, but it's the revenue that comes from here is very predictable. If I look at how our current business breaks down against those three blocks, it's probably 50, 30, 20, or 50 consulting, 30 product and solutions, 20 monitor and manage. Now, over the next 12 months to 24 months, we'd like to see significant changes where there is much more monitor and manage, some increasing product and solution, especially our own products and solutions, and consulting services will become a reduced overall percentage, but will still be really key in making those initial contacts and attracting customers into the group and enabling us to then cross-sell the products and solutions and the monitor and manage services that we really want to bring into the business. Key under some of the underlying metrics around that is that our monitor and manage services are relatively high gross margin activities. So typically in the 45 to 50% range, and they're highly scalable. So our security operations centre and NOC in Box Hill currently is serving 150 to 200 customers. This is something we think with little investment is very scalable. We could probably see a 5x scaling in the monitor and manage group without significant headcount being added. So given that it's high gross margin and highly scalable, the other areas, the consulting service and the products, are all designed to enable us to push customers towards that monitor and manage, which is delivers good results for us. So where do we think we'd like to go over the next 12 months, the end of through the rest of the financial year? Certainly look to add a number of acquisitions to the team, add some additional capabilities into the organisation that we don't currently have. We are listed number one or the number one listed cybersecurity company at the moment. We're hoping at the next couple of rebalances we will be welcome into the ASX tech industry, and when the ASX 300 rebalances, we hopefully come in there. Looking to significantly increase our enterprise value. It's currently around a market cap of 200 million. We'd like to see that grow to sort of north of 300 million. Increase our revenue turnover run rate, just sitting around 100 million now. Look to increase that up to 150, exceeding 150 million. That'll be a 350% uplift from where we finished the FY20 financial year. So at the end of the last financial year, we were just over 40 million revenue turnover. It's over 100 today, and our ambition is to continue to grow that and be north of 150 by the end of the financial year. We were EBITDA positive for Q4. We see that with the current run rate, we'll have significant EBITDA results. We'll be profitable for the first time since the company listed, which is a great achievement. We also see the pipeline of acquisitions that are coming in will add to that. You know, we're very selective. We're not looking to invest in any organisations that aren't making money or that will take us require investment to get them to the right spot. Each acquisition is EPS accretive and is adding to our EBITDA run rate. Importantly, we'll add to our skilled professional base. You know, at the moment we're at 200, 220. We'd like to see some growth in that. It's becoming more difficult to attract top talent, and we know our clients are struggling to bring that in. So improving our organisation, being recognised as a great place to work, and having the right mix of skilled professionals across Australia, and also growing into New Zealand and potentially the UK and the USA through one of the target acquisitions, will enable us to sell those services, those assurance services that can be delivered from anywhere into an expanding customer base.
Julian, sorry, it's Jane here, just jumping in quickly. We'll need to probably wrap up quickly in about the next minute if we can, to fit in a question or two.
Sure. So I'll just say how we're pulling it together. finance and administration, we've centralised a couple of key roles around industry executives, and then the chief executives at the top. So a very strong team in place, very focused on the service lines, and delivering significant change in results over the last couple of years. So I'll leave it there and then take some questions.
Excellent. Thank you very much for that. It's clear that there are some really exciting things happening in the business. I'll ask you just to stop your screen share so people can see you at a slightly larger scale. And we have had a huge number of questions that have come through. So thanks to everyone that has submitted one. First one is, you've completed a number of acquisitions. So how are you managing to pull that all together? And can you talk briefly about what's coming next on the acquisition front?
Sure. So we've invested quite heavily in platforms. So we've deployed Oracle NetSuite across the business, which has given us the capability to really quickly integrate acquisitions into the mix. And we're integrating behind two key brands. So North is our federal government brand, and the smaller acquisitions that have come into there, SEER and Ludus are going there. And then we have our financial and industrials brand, Pure Security, and some of the smaller acquisitions like Rivium have folded in there. So I think it's a combination of putting in some good platforms, which has given us the capability to absorb the next round of acquisitions. Where we're going with those, as I mentioned, strongly into IoT, and then building out against that capabilities matrix. So I'd like to be, over the next couple of years, very strong in smart cities, smart utilities, IoT and 5G. And we think the work from home thing will really change and be embedded into organisations over the next couple of years. So we're continuing to build our capabilities there and take advantage of that shift.
Excellent. I think you might be right. Okay, so quick question on opportunity. What do you think the opportunity will be like in the next 2 to 3 years? And what split do you expect between organic growth and acquisitive growth?
So our organic growth is growing at different rates. In our government, law enforcement and defence, high teens, low 20% is what we're expecting to see. We expect to see the industrials and financial services probably low teens. That's relatively flat, though they're not going backwards in their spend. They recognise cyber is still critical to protecting their organisation. And our smart cities, smart utilities is growing quite significantly, but off quite a low base. So if you sort of blend that out, we'd see 10 to 15% organic growth, and the balance to make up the difference to those run rates that I mentioned will come through acquisitions. Excellent.
We actually have a number of other questions that have been submitted, but we're just out of time. So what I might propose is if anybody has a question that hasn't been answered, please feel free to either get in touch with me or get in touch with Tesserent by Julian or Alex. Thank you very much, Julian, for your time. I really enjoyed your presentation. And to everybody that made time to listen today, thank you as well.